This is Redline Money. I'm Carolyn Wright, and with the expert help of Richard Harris of Port Shelter Investment Management and David Roach of Independent Strategy, we'll take a weekly delve into the future of the economy by finding out where their red lines lie and what you need to know as an investor. So we're going to get back on a bit of an environmental bent this week, and in particular focusing on Europe, where a little while ago Germany had a landmark case which basically altered their constitution, saying they need to do a lot more about the environment because they need to protect it for future generations. Now this comes alongside a huge spending plan that I think David knows the details of for regeneration of the EU.
Well, yes, and I think the judicial side is very interesting because there's a wind of change blowing. It's in Europe, it's elsewhere as well. The German government lost two cases. One was in front of the Bundesverfassungsgericht, the Constitutional Court, who ruled that one generation cannot use up the carbon credits of another generation. In other words, one generation cannot do damage to the environment, which then has to be paid for by the next generation. That's illegal. The second was they lost a case in front of the European Court of Justice for polluting individual cities. Yeah. Again. Then there was the Dutch case against Shell, again brought by young people. And there was a fourth case in Australia brought by a 19-year-old and a 90-year-old nun against electricity utilities. So it's part of a general trend of the courts, all of them by the look of the judges being about the same age as me. So I think 10 years ago they would have been ruling completely differently, but now they've woken up and they're ruling really in favor of major climate change. Now, the second chapter to this are the EU plans, the Spanish plans, the Italian plans to spend around 10% of GDP in Italy, 10% of GDP in Spain, and 800 billion euros, of which 50% approximately is going to be spent in green projects. So things are really changing.
And that's one heck of a lot of investment, isn't it? So that's the thing that we're going to focus on, I would assume, guys.
Well, it is. And it is interesting because, the whole idea of environmental investment, it's the great J curve. Nobody wants to spend the money, even though it's going to be beneficial in the future. Then if you do spend the money, you're worried that somebody else is going to have an advantage as a result of you spending the money. But the Europeans certainly seem to be leading on this, which is interesting because there are whole sort of constitutional issues associated with a court telling the German government what to do, because typically politicians are the people who make the laws. But I think this is really pretty well hardwired now that the Europeans are going to be leading on this. And that has implications for the kind of technologies that we're going to need in order to improve the environment. It's still a bit wishy-washy. And I think the politicians maybe have been a little bit overambitious in saying, let's do all this by 2030. But they have done, a court has ruled, and the Germans have to do it now. And probably that means they're going to pull everybody else in Europe along.
Well, actually, that's true. And it's also true that the hardwired business and the time limit business, the ticking bomb business, applies not just to Germany. I mean, the place it applies most to is Italy. Italy is spending 10% of GDP, having already got 130% of GDP as debt. It'll now be 150% of GDP, which is more than 10. But anyway, Draghi, who, having ruled as a European Central Bank, saved the euro, done everything that was needed to be done to save the euro.
Super Mario.
He is now doing everything that needs to be done in order to save Italy. Now, it's not only environmental investment. This is 180 billion euros being spent in Italy alone. Okay, another 170 billion in Spain. But it is not only about spending money. It is also about reform processes, labor market reform, judicial reform, which are linked into this. So you get a productivity kicker integrated into the plan itself. Now, Draghi has staked his future on this.
Right.
Completely. Because it actually means he can't become president in January, which he could have done. He actually, now that he is in charge of this plan, he is going to remain in charge of this plan as Prime Minister into 2023. So it's going to happen.
Wow, that's
That's
quite
a big change.
significant.
Yes.
You think an Italian prime minister is going to last till 2023?
Yes, he is going to last till 2023 because anybody who goes against him, such as Salvini in the Northern League in Northern Italy, Salvini has already tried to go against him, and the result is his votes have plummeted. So anybody who goes against him is going to lose.
I think he's got a very good reputation, you know?
It is interesting for the Greens too, because could this be a little bit like Brexit, where you have a very strong party that's really focusing on a single issue, and all of a sudden that issue has been taken away? Oddly enough, the Greens have been mildly effective, but we've seen this movement coming from really being led, I suppose, by young people, obviously driven by money and interest from elsewhere.
And Greta Thunberg.
But it could lead to the Greens, who have been quite an influential political grouping in parts of Europe, becoming almost irrelevant.
No, I don't think so, with respect, as always, in debates of this nature.
Well, that's it. Could it be the exact opposite?
It's the opposite. And I'll tell you exactly where it's going to be the opposite, in my always humble view. It's in Germany. If you look at the Gruene in Germany, the Green Party in Germany, it is now level pegging with the CDU-CSU, and approximately twice the percentage of the polls of the Social Democrats. So there is no way in which the next election in Germany, which is on the 26th of September, with the federal elections, is going to produce anything else but the Greens in charge. And that actually means that what you're going to see is Germany is going to be led by a coalition which itself will either be led or dominated in other ways by the Greens. The leader of the Greens is highly impressive LSE graduate from London. And I think the result of that is you're going to see another 1.5% of GDP in Germany devoted to public expenditure, which has been wilting for years. And that public expenditure is going to be the greening of Germany. So Germany, in a sense, then comes along behind Italy and joins Italy. But of course, Germany is such a large economy, this makes a monumental difference.
But also that politically and economically, it makes an enormous difference, because the Greens have typically been on the left and quite far on the left. So, you know, this is a spend and subsidize kind of party. And that has big implications on the economy as well. I mean, we've talked in previous podcasts about government starting to move into the private sector. Well, this is only going to exacerbate things, leading to all the issues that we've been talking about before in terms of debt and inflation.
But do you think that they say that example we came up with at the beginning in Holland for Royal Dutch Shell, where they now have to bear corporate responsibility, that's sort of a precedent as well, where not only the governments are being forced to look at this, the companies themselves they're legally obliged to do it.
Actually, even when I worked for Shell many decades ago, they were conscious of these issues. Yes, they're a big oil company. Yes, they are a polluter in terms of the fact that their products pollute the earth, but they're very sensitive. And most of these big oils have been very sensitive towards the environmental issue. And I think that they are going to be very important players in terms of the greening of the planet as we go forward.
Well, they certainly have to be. I'd say, we're seeing the same thing turning against mining companies, oil companies, in all sorts of other places. Look at the Peruvian election. Look at what has happened in Chile with the Constitutional Conference, which is putting a 75% tax on the profits of mining companies when the copper price is above $4, and you can go on. But I think the key for investors in this one, which after all we are in the investor business, being almost rivals of Bezos in terms of our personal wealth.
Are you bidding for a seat in his spacecraft?
No, I'm hoping he won't come back. And maybe he'll take Elon Musk with him. But in investor terms...
And Donald Trump?
No, he's not cultured enough. He'll die out of his own accord.
He pressed the wrong button.
Okay, terms of investor interest. Yeah. First of all, Germany is a leading productive producer of green goods, and always has been. It dominates the quality end of a lot of green goods. So there's an equity argument to this about investing in European equities as opposed to US equities or Asian equities. That's number one. Number two is this is not good for bonds in Europe, because governments are going to be borrowing more, even though I think this will be a productive investment, but bond yields will go up. So there's no point in holding bonds if bond yields go up, because the value of your investment goes down. And the third aspect is that the growth prospects coming from this, which I think will add between 1.5% and 2% per year to European GDP between now and 2026, the growth prospects of this will make the euro stronger. And this is something Richard was talking about last week. Has the euro had its day in the dark? And is it about to emerge? And I think, yes, it is about to emerge against the unfinanceable deficits of Bidenomics in the United States. That's where I think investors will make money.
I agree. I even agree with my comment last week. I think the thing with this issue in Europe is that we are going to see a movement ahead in the technology of the Greens. But interestingly enough, a lot of that technology in the last cycle was taken up by China, which has become a very big producer of green goods, as well as a very, very, very big polluter. Things like wind farms, things like solar panels. I think a lot of that technology is not going to seep into China this time round because of the state that we're in regarding trade and general political issues. And that could also be interesting in terms of keeping that manufacturing and that effort closer to home in Europe. So that could be another positive factor towards the greening of Europe.
Redline Money takes the expertise of David Roach of Independent Strategy and Richard Harris of Port Shelter Investment Management as they talk markets, prices, bubbles and busts, and some even more interesting topics. David and Richard have nearly a century between them of searching for the red line in bull markets and bear. Hear what the crowd isn't saying about current markets and price moves in the long term and even longer back to the Egyptians. See markets as an engineering system, a biological organism, or as the behaviour as subatomic particles. You don't get this anywhere else, and you know it makes sense. I'm your host, Carolyn Wright. Music is by Tim Moore at Pixabay, and Redline Money is produced in Hong Kong. It's available at redlinemoney.online.